watching Khaos Crypto News, the crypto news that you need to know.
What's up, everybody? I'm your host, Khaos Dubs, and today we have some breaking news. I'm sure many of you have heard about the USDC debacle happening already and the depegging. We are going to touch on that. DAI is also depegging. XRP has seen over 1.5 billion in trading volume come in. The H-bar disaster and how they fix it, we're going to touch on that. Thailand is banning staking, a crazy crypto exploit, and more. Let's dive in right now. So it looks like USDC depeg, Circle's $43 billion stablecoin, is in the spotlight as Silicon Valley Bank exposure is revealed. Here's the latest information. Circle, the issuer of the world's second largest stablecoin, USDC, said in a tweet that 3.3 billion of its 40 billion USDC reserves are still at the fallen lender. The company's stablecoin was hit with redemptions following the news as concerns around its reserves increased. The stablecoin burned some 2.34 billion USDC on Friday, taking out the tokens from circulation as investors redeemed dollars. The wave of withdrawals put some pressure on USDC's dollar peg, causing it to distance away from the intended $1, slid to an all-time low of 87 cents. Currently, the stablecoin is trading at around 91 cents, down by about 8% over the past day. Aside from Circle, numerous other crypto companies have also disclosed their exposure to the bank. BlockFi has 227 million in uninsured funds stuck. The Avalanche Foundation, as well as Web3 company Proof, are some other companies that have been hit hard by the recent collapse of Silicon Valley Bank. The stablecoin is still probably in good shape though. Circle holds 77% of its reserves in treasury bills. These treasury bills are held at BNY Mellon and managed by BlackRock. This alone provides an absolute floor on USDC of about 77 cents. Even in the worst case scenario, Circle holders are expected to be able to cash out every USDC token for at least 93 cents. All in all, even if we assume every single bank they hold cash at goes bust and returns a worst case 70% of the cash value asset sales, USDC would still be worth 93 cents somehow. Now we'll talk about the DAI depeg. So DAI depegs to lifetime low as stablecoin rot plagues crypto. As the market continues to digest the impact of sudden collapse of tech-focused Silicon Valley Bank, stablecoin DAI has been knocked off its peg and hit an all-time low of 88 cents. Traders are speculating that Circle, which issues USDC, has worse exposure to Silicon Valley Bank than the 3.3 out of 40 billion that it disclosed. $563 million worth of DAI was burned in the last 24 hours. Meanwhile, Tron's USDD has also been knocked off its peg and is down to about 93 cents. Although Tether, despite all the bullshit, remains pegged at $1. Now, XRP's price prediction as 1.5 billion trading volume comes in. Are whales buying? Well, the sixth largest crypto is hanging at the very edge of a cliff as uncertainties in the market mount. Despite the total market cap sliding below the 1 trillion mark to stand at 963 billion on Saturday, XRP's price is relatively unchanged. Recall the collapse of Terra USD in May 2022 and the bloodbath that followed across the market. Crypto giants like Voyager Digital, Three Arrows Capital, and Celsius were not able to survive, resulting in a series of bankruptcy filings. The possibility of a weakened sell-off cannot be taken off the table, with investors likely to panic due to the contagion of the stablecoin crashes. XRP price appears relatively stable while trading at around 37 cents. A glance back at the XRP price in December last year reveals its upper point of control at about 50 cents. The pressure mounting on top of $18.5 billion crypto cannot be understated. XRP now holds below all the major applied moving averages, including the 200 exponential, the 100-day exponential, and the 50-day exponential. The next tentative support would be provided by the buyer congestion at about 35 cents, and two outcomes would be expected at 30 cents, with the first allowing XRP to take advantage of the new liquidity and aggressively push for a trend reversal, or on the other hand, trading below the same point of control could trigger another sell-off as all hell breaks loose for the bulls. Declines below 30 cents may be unstoppable until XRP reaches about 25 cents. Now, I hope we don't see that happen, especially with the end of the case coming here pretty soon. Let's talk a little bit about Bitcoin. Bitcoin's price is likely to see low-end target of $9,000, this chief strategist warns. Bitcoin plunged to a 3-week low Friday, freeing itself from a tight price squeeze that had seen it fluctuate between 22.5 and 22.2 since March 3rd. Although inflation has been moderating in recent months, The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. The last economic data have come in stronger than expected, suggesting that the ultimate interest rate level is likely to be higher than previously anticipated. The comment saw the top cryptocurrency market capitalization fall by just over 12% to 19,628. Litecoin in the news. No recovery in sight as Litecoin price slides by 32%. Man, bad news for Litecoin holders. The Litecoin price prediction for March is bearish. The price has likely begun a correction after increasing for more than 6 months. The Litecoin price started to fall under long-term descending resistance after its 2021 high of over $400. While the weekly RSI is still above 50, the trend can only be considered bullish once the Litecoin price breaks out above these levels. In that case, an increase to an average price of 280 could follow. That'd be pretty sweet to see. Is it going to happen? Hard to say. $920 billion is the number to watch now that the crypto's trillion-dollar market cap is gone. The crypto market is taking a walloping, and there are 3 important reasons why Bitcoin's $380 billion valuation is crucial support for the entire market. Big round numbers always pique the interest of investors, and the $1 trillion total market cap is no exception. That held for 48 days. Concerns about the stability of the United States banking industry are growing with everything going on. The California Department of Financial Protection and Innovation did not explain SVB's closure. Nonetheless, it stated that the financial institution would be the first FDIC-insured institution to fail in 2023. What is the significance of the $920 billion market cap? A notable bounce occurred as total capitalization reached $920 billion, indicating large buyers around that level. Bitcoin is still a top 20 global tradable asset, valued itself at over $380 billion. Despite Bitcoin's 50% decline in a year to 19,650, its performance is comparable to that of billion-dollar companies such as Credit Suisse, down by 63%, First Republic Bank, down by 51%, Warner Bros. Discovery, down 43%, and Intel Corp, down 43% as well. By maintaining its $380 billion capitalization, it remains the 7th largest global base money compared to fiat currencies. For example, the Australian dollar has a monetary supply of 378 billion, while the Canadian dollar has only 220 billion. The Indian rupee, with a monetary base of 500 billion, is the next potential target. Crypto whales suffer huge losses due to this USDC depeg, obviously. The depegging of the USDC stablecoin has affected other stablecoins, wreaking havoc on the crypto market, projects, and stakeholders in a massive chain reaction. This one user says, I dodged Luna, dodged 3AC, even dodged FTX and their collapse, but I couldn't avoid Silvergate, nor SVB and USDC. Can't win them all. The same day, blockchain personality and Tron founder Justin Sun reportedly withdrew 82 million USDC from the decentralized finance protocol Aave V2 over a series of transactions, and he swapped it from DAI. MakerDAO, the stablecoin's issuer, filed an emergency protocol on March 11th that, among many items, called for restrictions on minting DAI using USDC to prevent panic selling. Curve Finance, a popular DeFi protocol for trading stablecoins, reported a historic all-time high daily trading volume of over 5.5 billion. In one incident, a user received just 0.05 Tether, 5 cents in Tether, after paying over $2 million in USDC, and we'll talk about that in a minute here. This USDC investor shells out $2 million to receive only 5 cents in Tether, trying to evade the crash. To cut losses, investors started selling their USDC tokens in exchange for other stablecoins, such as Tether. On-chain investigations revealed that the user had stored the assets in a liquidity pool. The user could have sold his LP tokens for USDT for a 6% slippage. However, they chose to go for a questionable method. The unfortunate soul used the KyberSwap aggregation router to dump a large clip of 3 CRV, which is DAI, USDC, and USDT put together, LP tokens, into USDT. Given the race against time, the USDC investor forgot to set his slippage, which allows investors to set an exact price of the token for the transaction to go through. He explained the nuances that eventually led to a maximal extractable value bought, netting $2 million in profit after paying $45 in gas fees and $39 in MEV bribes. The above episode highlights how human error can result in a permanent loss of funds. You've got to be really careful when you're doing this stuff, folks. 6.3 billion erased from USDC market cap as top stablecoin depegs from US dollar. I know we've been beating this to death, but The revelation triggered a mass sell-off of the crypto assets, sinking the coin's market cap from 43.6 billion to 37.6 billion overnight, a $6.3 billion decrease. These numbers are so big that as a human, we have trouble really understanding how big these numbers are. If a million seconds is like 11 days, a billion seconds like 30 years or something, it's absolutely crazy. Now I want to touch on that a little bit. Patrick Riley here actually was talking about this on in the Chaosverse a couple episodes ago. We had this conversation. There's no such thing as a stable coin when the national currency and banks are unstable. I don't think this was the black swan, but rest assured, it's coming. Now, if you go back and watch the last couple episodes in the Chaosverse, you'll see exactly what he's talking about. Let's talk a little bit about Aave here. Aave DAO votes for rescue plan to save lost tokens. The plan intends to allow developers to recover tokens from certain Aave contracts and send them to owners who transferred them by mistake. Now, again, we talked about this as well in one of the past Chaosverse episodes. When you have access to be able to manipulate the blockchain, it kind of means the blockchain's ruined, and that's kind of what I was thinking was happening here before I read into this a little bit more. But this actually sounds like the protocol is doing something good for their users while not risking anybody else. The proposal, called Rescue Mission Phase 1 Long Executor, authorizes Aave developers to upgrade smart contracts that have been mistakenly sent tokens in the past, causing the contracts to send the lost tokens back to their original owners automatically. The confirmed proposal only affects lost Aave, Lend, Tether, and Uni and staked Aave tokens that were mistakenly sent to the Aave token contract, the Lend token contract, the Lend to Aave migrator, or the ST Aave token contract. The proposal's text emphasizes that these tokens will only be transferred during the contract's initialization phases, stating, to be less invasive as possible, the new implementations only include that extra logic on their initialize function, with everything else remaining the same. Future tokens mistakenly sent to those addresses may be permanently lost unless a new proposal is passed in the future. If a contract cannot be upgraded, tokens lost in this way are usually impossible to recover. Now on to some HBAR news. Hedera reveals mainnet exploit led to loss of liquidity pool tokens. Hedera confirmed an exploit in its mainnet leading to a loss of liquidity tokens. However, the firm noted that the exploit did not impact its consensus layer. In the latest hack, the attackers exploited the smart contract service code of its mainnet and transferred service tokens from users' accounts to their accounts. The hackers targeted liquidity pools accounts on multiple dexes that use Uniswap v2 derived contract codes. However, the bridge operators detected the unusual activity and took swift action to disable it. Hedera's announcement also revealed that the team identified the root cause of the attack and is working to provide a solution. Hedera failed to disclose the number of tokens that the hackers stole. After turning off the network proxies, the Hedera team suggested that the token holders check the balances on their accounts and EVM addresses on hashscan.io to ensure the funds are intact. Meanwhile, the HBAR price has declined 8.5% over the last 24 hours and trades at just over 5 cents. Now let's talk about Thailand banning crypto staking and lending. Here's what we know. On March 8th, Thailand's Security Exchange Commission published an announcement targeting crypto staking and lending services issued by crypto firms. It is seeking public feedback on draft regulation concerning the prohibition of digital asset business operators or virtual asset providers, provision of or involvement with lending and staking services in which the authority calls crypto saving and crypto deposit taking. Digital asset business operators are not allowed to provide or support deposit taking and lending services to prevent possible damage to digital asset investors and the public in the possible event of service discontinuance or financial problems that may occur on a continuous or concurrent basis among service providers, as has recently been the case for foreign counterparts. Case in point, additionally, the Thailand SEC further stated that the draft regulation, which it wants the public hearing, is also expected to clarify the common misconception that the supervision of regulated digital asset businesses is under the same scope as crypto staking and lending services, which are currently not supervised at all. A couple more articles to talk about today. Rapper the Game is the latest to fall foul of SEC for violating security laws. The U.S. Security Exchange Commission revoked the registration of Paragon Coin. Paragon Coin claimed to offer blockchain solutions for the legal cannabis industry, and as of the writing, the official website shows that they are filing for bankruptcy. After failing to file the requested periodic reports, Paragon Coin also failed to prove that they were not in default. Hence, the SEC notice reads, "We now find respondent to be in default." Obviously, the game was involved with that, and that's pretty much what you need to know. And finally, our last article for today. This is pretty cool news. Brave Browser now lets users sell crypto within the wallet. First of all, if you're not using Brave Browser, what are you doing? They have a whole bunch of awesome features we're going to talk about just briefly at the end of this article. But Brave's the way to go. It saves you time, it removes ads, and you can use crypto in it to tip your best and favorite creators. The privacy-centric browser tries to boost crypto self-custody by providing an off-ramp with its integrated wallet. A new feature that allows users to not only buy crypto but also sell it for fiat, including US dollars, euros, and a British pound, without leaving the integrated Brave wallet is now a thing. How cool is that? Self-custody and the not your keys, not your coins mantra have regained momentum following the collapse of prominent cryptocurrency firms. The new desktop browser feature, which is powered by crypto on-ramp startup Ramp Network. According to Brave, users in select countries can now sell their coins for fiat, including Ethereum, Solana, USDC, and Brave's own basic attention token. The company said that 38 currencies can be sold via the off-ramp. Now, if you notice right up here, you have these little settings right here. If you wanted to tip your favorite creators, you can go here, you can check your balance, and you can actually see if the creator's verified or not. If the creator's verified, you can just tip them right there using BAT. Not only that, all the ads you watch every month pay you in cryptocurrency. That's how I got that balance there, just watching ads, and they're not even crappy ads. While self-custody has grown in popularity over the past decade, the most common way to hold digital currency remains with centralized exchanges. We expect to see the shift with innovations in user experience like the one we are releasing today. Launched in 2016, Brave blocks online ads and website trackers by default, making it a popular web browsing tool for privacy-minded and crypto-using individuals. In 2017, Brave added the basic attention token, which rewards users for allowing the Brave browser to show advertisements while they surf the web. It's a win-win for everybody. Anyway, that pretty much wraps up this episode of Chaos Crypto News. I hope you found it informative, so make sure you like the video, subscribe to the channel, and stay tuned for the next one. We've got a lot of new stuff coming out. We're going to try to keep doing these a few times a week. Thank you all for watching. Take care. Catch you later.